One of the benefits of falling behind on earnings coverage is we get to see the market reaction to the results. In the case of Lundin Mining, it appears that Mr. Market was in favor of the earnings, with equity trading up over 4%. In fairness, the company saw record copper and zinc production this year, while also undertaking 3 major transactions. So I suppose you could say things are going in their favor. Not to mention, the group behind the name is one of the strongest in the industry. All right, guys, we're talking Lundin, we're talking earnings. Let's dive in. Lundin Mining in the fourth quarter posted revenue of $1 billion. However, a portion of this was recorded from discontinued operations as a result of the announced sale of their European assets, Zinkgruvan and Neves Corvo, in December. So for comparison purposes, we're going to look at just the continuing operations. Revenue from continuing operations amounted to $856 million, which was a decline from the $893 million in revenue recorded in the fourth quarter of 2023. This decline wasn't really given an explanation. However, the assumption is that it's a result of copper pricing, with copper pricing averaging just $3.75 a pound during the quarter, while gold prices averaged $2,600 an ounce. Net earnings per share totaled a loss of $160 million, or 57 cents per share across all operations, while EPS across continuing operations was a loss of just 25 cents. Comparatively, last year saw net earnings of $40 million, or 5 cents per share, which dropped to EPS of 2 cents per share for continuing operations. Adjusted net earnings across continuing operations totaled $95 million, or 12 cents per share, versus $72 million, or 9 cents per share last year. Adjusted EBITDA from continuing operations, meanwhile, was flat at $368 million. Cash flow from operating activities improved from $250 million to $547 million on a year-over-year basis, while free cash flow improved $44 million to $360 million. On a full-year basis, revenue improved from $2.7 billion to $3.4 billion, a 25% improvement, while net earnings declined by 45%, dropping from $277 million to $153 million. Adjusted earnings improved marginally from $288 million, or 37 cents a share, to $292 million, or 38 cents a share. Adjusted EBITDA, meanwhile, went from $1.1 billion to $1.5 billion. Cash flow from operating activities for the full year improved from $827 million to $1.3 billion, while free cash flow jumped from negative $20 million to $508 million. Lundin Mining finished the year with a cash and cash equivalents position of $356 million, an improvement from the $269 million figure as of the end of 2023. However, the net debt positive moved from $1.2 billion to $1.6 billion. Debt increased as a result of $203 million in dividends paid in 2024, alongside a $350 million payment made to acquire a 19% interest in Caserones, bringing Lundin's ownership to 70%. Moving to the production data, copper production in the fourth quarter totaled 101,000 tons, which was a slight decrease versus the 103,000 tons of copper produced in the fourth quarter of 2023. Zinc production came in at 52,000 tons versus 51,000 tons last year, while nickel production fell to 1,600 tons from 3,700 tons. Gold production improved from 44,000 to 46,000 ounces, while molybdenum production was nearly flat at 912 tons versus 928 tons last year. Cash costs across continuing operations were within a range of $1.07 to $5.22 a pound, with Lundin oddly refusing to provide a consolidated figure across its operations. All-in sustaining costs, meanwhile, range from $2.12 to $9.53 a pound. For the full year, copper production came in at 369,000 tons, as compared to 315,000 tons produced in 2023. Guidance had called for 366,000 to 400,000 tons. Zinc production totaled 192,000 tons. Nickel production totaled 7,500 tons, both of which failed to hit guidance. And molybdenum production totaled 3,200 tons in 2024. Gold production, meanwhile, totaled 158,000 ounces, hitting guidance of 155,000 to 170,000 ounces. For the full year, cash costs came in at a range of $1.58 to $4.20 per pound, while all-in sustaining costs were within a range of $2.62 to $7.60 a pound, with Lundin again failing to provide consolidated figures across all operations. Guidance had called for a cash cost of between $1.60 to $2.80 a pound for copper, depending on the mine being referenced, and $2.80 to $3 a pound for nickel. On a mine-by-mine basis, all three operating copper mines are said to have come in either below or within guidance ranges, while the Eagle mine saw nickel cash costs above the guidance range. Looking to 2025, production is expected to decline this year, with guidance calling for a production range of 303 to 330,000 tons. On a midpoint basis, it represents a 14% decline from 2024 production levels. Gold production, meanwhile, has been guided to be within 135 to 150,000 ounces, which also marks a decline year over year. While nickel production is expected to improve, with guidance calling for a range of 8,000 to 11,000 tons. Lundin has also smartened up a bit and elected to provide a consolidated cash cost guidance range for this year, with copper expected to have cash costs of $205 to $230 a pound. Nickel production, meanwhile, is expected to come in at $305 to $325 a pound. Capital expenditures are expected to total $735 million, of which $530 million is allocated to sustaining capital, and exploration guidance calls for $40 million. This production outlook is despite three major transactions that took place over the course of 2024. First, Lundin expanded its ownership in the Caserones asset by 19%, taking its ownership to 70% in exchange for $350 million in cash by exercising a call option, which has an immediate impact on production. Second, the company entered into a 50-50 joint venture with BHP to acquire Filo Corp and their Filo del Sol project at a cost of $2.1 billion Canadian to Lundin, including $859 million in cash. As part of the deal, BHP paid Lundin $690 million as consideration for Lundin moving their Jose Maria asset into the joint venture. Finally, Lundin in December announced the sale of their Neves Corvo and Zinkgruvan assets in Portugal and Sweden in exchange for $1.5 billion, with an upfront payment of $1.4 billion to be paid upon closing. The sale moves Lundin out of Europe and squarely focuses them on South America. Okay, so let's wrap it up. 2024 was arguably a transformational year for Lundin. The problem for them now is there still is a long way to go for that transformation to pay off. But this is a company that this year celebrated their 30th anniversary, indicating they know how to stay around for the long term. And that's what investors are betting on. All right, guys, we're in the thick of earnings season. If there are any companies you want us to cover, let us know in the comment section. We're trying to get to as many of them as we can. We also appreciate all of the likes, subscribes, sharing of our content we get. It really motivates us to keep going and keep delivering for you guys, those who take the time to watch these videos. All right, everybody, thanks for watching.